All right, good morning, trade pros. Welcome to our morning market update for Monday, November the 12th of 2018. This is George Papazov from Trade Pro Academy. We got a great morning market update for you today. First, we want to say for any active military service members or past service members, it's a very important day, and it's the 100-day anniversary on Sunday of the end of World War I. And we want to send our appreciation to you guys, and our thankfulness for also being engaged, being brave, giving up and sacrificing part of yourself, part of your life to defend the country and our rights and freedoms, and most importantly, for those that have given their life for it. So today we spend some time to appreciate those and their families that have made the sacrifice. All right, we're very thankful for it. Also, if anyone's out in California that's affected by these fires, Southern California and Northern California have two separate fires. I hope you guys are safe. It's been pretty crazy. I read somewhere 200,000 people have been evacuated, 200 homes lost, 26 deaths or so, and they're tallying them up. Some people died in their car as they tried to escape. So this is very sad, and we're hoping that you're safe out there. And if you've been affected to it, our heartfelt positivity goes out to you, and we support you guys, and we hope you're safe. All right, be safe out there is all I'm saying. Um, Today's morning market update, we're going to talk about a few things, including oil and a few other things as well. So let's just get started. In Asia, Japan's up 0.1%. Hong Kong's up 0.1%. China's up 1.2%. India's down 1 percentage point. So you're seeing some flat market action here overnight in the Asian session. In Europe, London's down 0.1%, Paris is down 0.2%, Frankfurt's down 0.7%. So we're getting a little bit more bearish there. And in the United States, futures are down about 0.2 percentage point across the board. All right. Last week, about $3.6 billion of money flowed into equity funds during the week that ended Wednesday. That's a really big inflow, while 5.5 billion went into bond funds as well. Hold on, let me just turn down that squawk. That's really loud. All right, so we're seeing a lot of inflow of capital after yesterday's or last week's rally in equity markets. It's the first week of inflows in 7 weeks. And now that October's over, November's bringing a different sentiment. It's a different feel to it. We're starting to look a little bit bullish. At the same time, though, we're at a key transition point. There's a lot of overhead resistance, and this is the turning point here. The question is going to be on the sell-offs. Is there going to be high volume? And is selling going to get aggressive, or will buyers step up to higher prices and keep paying more and more and pushing this thing through the resistance? If we get through resistance levels this week, we're seeing a lot of buy stops above, and the market could rally pretty significantly, but it is a turning point. I'm going to tell you this. Today, there isn't that much economic news. In fact, there's none, and it starts to pick up around Wednesday of this week. So we're seeing for a little bit of flow back to the upside, early week rally, maybe with a midweek transition back to the downside. So watch for that in the S&P 500 market. Crude oil is up today, and we're going to talk about why that is in a moment. Gold prices are down slightly. Bitcoin is flat as well. 10-year treasuries down 5 basis points. But the bond market is closed for Veterans Day today, so bonds are not going to be trading. Equities are not closed. Equities trade as per the usual time frame. There's going to be no closures there. All right, so remember, bond market being closed means there's going to be a little bit less volatility out in the markets. No news, and we could see a sideways type of slower equities day. It doesn't mean there's going to be no opportunities. It does mean that you're going to have to be a little bit more patient throughout today's session. So remember, take that patience with you. Start out the week on that note, and you're going to have success in that sense. All right, so today at 2:30, we got Fed's daily speaking. That's at 2:30 p.m. in the afternoon. No economic news until then. Nothing on Tuesday as well. We have some stats out of the UK. Then on Wednesday, we have the all-important inflation reading out of the United States at 8:30 in the morning. Those numbers are important because that's a precursor to what the Federal Reserve might do. When Chair Powell was asked in his last conference, what would it take to start being more aggressive with rate hikes? What he ended up saying was higher inflation. So now all traders are watching inflation, especially after last week's last week's non-event, and the Fed failing to acknowledge that markets were weak. The stock market took that as he's not going to help us. The Fed doesn't have our back. It doesn't care the market sold off. It doesn't see it as significant. They're going to continue to hike. And that dovishness that hawkishness rather, that shrugging off that the market had dropped so much in October translates to sticking on their path of rate hikes. Those rate hikes push the US dollar higher, which is why you're seeing such strength in the US dollar. It's getting ready to break out of the 2018 high, and that pushed other assets down against it. I still see strength in the US dollar. I do think we break that 2018 high and we pop some buy stops and we run up the dollar a little bit higher over the course of the next 6 to 8 weeks as we end the year. All right, so look for strong dollar momentum, and you could sell currencies against it while buying the dollar. Okay, what was the news in Saudi Arabia on the weekend? Saudi Arabia unilaterally, which means by themselves, have decided to cut oil output by 500,000 barrels. All right, and we know that this market is oversupplied. The oil market entered a 20% correction last week. All right, funny enough, a couple of days after the Iran sanctions came in, and Iran sanctions are given, 8 countries were granted waivers for 6 months, so we've kind of relieved that pressure. And now it's oversupplied. Now we kind of turn to the other side. It got very bearish very quick. Here's the thing. Saudi Arabia is doing this ahead of a November 6th meeting for all of OPEC and non-OPEC members. We're going to meet and discuss whether or not they're going to extend production cuts that are set to end in 2018 this year. What they're talking about is decreasing the output so they could support the price and make it stop dropping. All right, this sell-off in oil is hurting a lot of these oil-producing nations, their budgets, their profits, etc. So Saudi Arabia took the jump and leap of faith and said, we're cutting by 500,000 barrels a day. 500 million, wait, very important, 500,000 barrels per day. The market right now is oversupplied by 1.6 million barrels a day. So it's a little bit of a sentiment change. They're saying, look, we're going to reduce some of that output, but we're going to need OPEC to jump on board with us and cut output by up to 1 million barrels per day, which will then be bullish for oil. So this initial move by Saudi Arabia does 2 things. Number one, it sets the tone for the December 6th meeting for an output reduction by all nations. And it's leading the way by saying, look, we're on board. We're the largest exporter of OPEC. We're on board to do this, and we're showing our willingness by cutting 500,000 barrels. And then on top of that, they want to persuade other partners to do the same. However, the real missing link here is Russia. Russia's energy minister Novak said, we don't want to rush to these conclusions yet. It's too early. We want to continue to supply our crude oil at these current levels. So the question on December 6th is whether or not Russia jumps on board. Russia is the biggest output or supplier of oil, crude oil in the world outside of OPEC. And Saudi Arabia and Russia are 1 and 2, and they've switched spots, but they're the 2 biggest producers. So Russia needs to be on board for this deal to work. And here's what happened. Last night at 6 p.m. on the open, oil prices gapped higher by 85 cents. At TRADEPRO Academy, we tell you that the lower prices are dropping, the less likely you are to get a short and make it work in your favor. The longer you wait for a trend to play out and to convince yourself that it's time to jump in, the more risky that next trade becomes. And if you miss this 20% short, the last thing you wanted to do on Friday, and we talked about this in the trading room, is to be short crude oil going into a weekend where you knew there was going to be OPEC news. So we prepared our members for that. And that gap higher means that some people are taking losses in the magnitude of $700 to $800 plus per contract without the ability to have been stopped out because the price didn't trade there. So that's called the gap higher. We've seen a short squeeze. Crude oil is going to be the volatile asset today. We're going to see how this money flows in as of the open. It's open right now already at 9 a.m., the pit session. And we're going to be trading crude and watching it very closely today. That's going to be the asset to follow because equities may very well be slow. If equities sit in a 10, 15 point range today, not surprised. All right, because that's what they should do. It's a consolidation start to the week on no news, no major developments, and all the money's going to oil. All right. Interesting stats out of Alibaba. They clocked in $30.8 billion of sales during its annual single-day extravaganza. So Alibaba was smart enough, their marketing team was genius to create a day where singles were able to purchase gifts for themselves. We don't need no other partner. We're going to buy gifts for ourselves, create a shopping mania, and it exceeds the Amazon Prime one-day event, which is the most similar because it's a 24-hour online sales event. And this event single-handedly exceeds the total sales on a dollar amount of both Black Friday and Cyber Monday in the United States. We know China has a huge population, and their purchasing power is huge. All right, so that's a pretty interesting statistic heading into this week because you could start to expect to see global markets doing the same. Global population started to buy more for themselves and for this holiday season. So now I have a poll question for you guys. I'd love to ask you, and if you could please comment below, this would be very helpful for the whole community. Are you going to spend the same, more or less this holiday season than last? All you got to do is same, more or less. Love to hear from you. If you want to put the reason as to why, great as well. Because we have a trade called the XRT ETF, the retail trade, where we think retail stocks are going to do good going into this holiday season. And we got a few really big retailers reporting soon. Look out to see their forecasts for the last quarter because that's where there's going to be a lot of consumption, right? So we think that markets, if they do rebound, retail and tech stocks should lead the way higher. That's your cue. Watch for retail. Also watch for FANG stocks, Facebook, Apple, Amazon, Netflix, Google, along with NASDAQ. If they continue to rally, we think the whole market's going to turn and rally into the end of the year. And then January, February of 2019, that's when we start to feel the pressure of Fed hikes. And we sort of wake up with the hangover from the holidays and reprice the market lower. So my expectation is that we rebound for the rest of the year, followed by January, February 2019 reversal. However, if we can't get above resistance, if we lose the XRT, the retail stocks, if we lose tech stocks and they start dropping, we're not going to get that rebound. Look out below moment. So it's a very tender moment here. It's a very transitional moment. That's what I'm going to leave it to you guys with. And Alibaba has shown us a little bit of a look into the scope of what consumers are feeling. And after we do this study on YouTube, then the rest of Wall Street will know what the TRADEPRO Academy Consumption Index is saying. And it's going to move markets. So you're a market mover. I believe in you. That's all I got for you guys today. Watch oil. It'll be volatile in today's session. That's what I think the opportunity is going to be. You guys have yourself a phenomenal rest of your days. Manage your risk. Trade like a trade pro. And if you want to learn how to trade, we got a free training. Go to tradeproacademy.com/free training or click the link in the description. It's a 6-lesson course. You're going to learn about stocks, options, futures, Forex as well, currencies, and trading psychology. Those are the 5 things we cover with the introductory lesson. We look forward to you guys taking that and hearing how you like it. Also, look forward to your vote below in the comment section. I appreciate you guys. Have yourself a wonderful day. Enjoy the first day of the week. And remember, be prepared for consolidation sideways market. And if you're prepared for that, if you do get a nice move, then you'll take advantage very easily. But if you're prepared for a massive move and you don't get it, it could throw off your psychology and you could do disastrously, if that's a word. Have a great day. Manage your risk, trade pro. See you tomorrow. Thanks for tuning in and goodbye. All right, trade pros here in the room. Thank you, Marky. Let's talk about some levels that we could qualify some great trades. We think there's some great opportunities here in the S&P 500. We're already seeing some action. Oil prices opened as well at 60.87. I'll bring Steven in to give you the levels. I'll tell you the next best trading idea at what level and price that is, and then Steven will come in and talk about oil. All right, so let's get started with some level analysis, and let's rock it out. I think we'll have a great day despite the fact we'll have a little bit of muted volatility given that it's bond markets are closed and it's a Monday with no news.